All right. Good morning, everyone. Just doing this live stream once again, and I kind of want to share with everyone the potential repercussions of what could actually be happening, especially folks who have their assets on FTX, what to expect. And like I said, it's going to be a challenging time. And why I have experience with this because I'm actually having assets on a smaller exchange that is going through liquidation processes as well. So although I don't have any assets on FTX, I do roughly know what might happen, and I want to help everyone prepare for what is to come, right? So folks, those who have assets on FTX, bear in mind that there is potential negotiation processes going on with entities that could and might want to help out with the situation, but I feel that the hole is extremely big. If it's a 6 to 8 billion in terms of funds that are not accounted for or cannot be accounted for, it really all depends on. I would assume that there will be several institutions coming together or potentially wanting to come together. So the key word here is potential, guys, and not everyone can and wants to bite this bullet. Obviously, FTX is already insolvent. It is gonna be bought up for pennies on the dollar, not based on the previous valuations that it was at the time. Obviously, now a large part of all existing shareholders are going to be heavily diluted. Okay, and if there is a white knight that decides to come in and save the company, right? Obviously, SBF is going to have a transitionary phase, right? He may be the CEO, running things operationally for at least a short time frame, but after that he will most likely be asked to go. Now this is only if there's even a white knight coming into play, and the white knight obviously wants to have the intention of making customers whole. This is what's happening behind the scenes, and SBF has already mentioned on Twitter that they are trying to raise money. Give me a second, guys. Okay, so sorry, as I was saying, so now behind the scenes, there's all these negotiations of fundraising and trying to see whether they can make customers whole. Now that's the very first thing. The next thing, unfortunately, and I don't want to. I'm not speculating here. I'm just sharing with you what might happen. So, for example, larger deposits, right, that have already been lost and have already been obviously liquidated through the possible tradings that have been done by Alameda Research, right? You are going to be in a situation where if the company does not outright default, you may actually be asked to either accept shares or accept tokens or a combination of both, right? This is a possibility. There's literally no other way. And why is that so? Why are you asked to accept shares or potentially tokens? Okay, first there are two parts to the story. In such proceedings, right, that are going on at this point of time, there is always okay, if there's no bankruptcy, there's no filing of chapter 11. Okay, if there's no filing of chapter 11, credit when there's a filing of maybe let me just share, sorry, let me just share whether there's a filing of chapter 11 first. If there's a filing of chapter 11 bankruptcy, right, creditors who have loan money, right, not for equity, right, but loan money to FTX International, they will have first dibs to the whatever value that is left in the company. Okay, they have first dibs, right? And whoever is having deposits on or whatever, right? Even though you are a user, you have placed large deposits into FTX, it doesn't mean that you have the rights to the funds upon liquidation, right? Because in the first place, there may not be any assets left. So this boils down to whether there are enough cryptos in the reserve, or I don't feel that there should be any left, because already he mentioned that there's a $6 to $8 billion hole, right? There's already a $6 to $8 billion hole. This $6 to $8 billion hole means that they don't have the reserves already. Hence, you notice that a lot of cryptocurrencies, a lot of crypto exchanges are going through a proof of reserves publicly, on Twitter or their own website to prove that, okay, they have X amount of this, X amount of that, and then hopefully that they can be more transparent and show the wallet that these reserves are being held. All right. Now, when the outright default is going to be the worst case scenario, that means nobody gets back their funds, and obviously SBF will probably be, whether or not he's going to be taken to court, that has yet to be determined, because what I realize is that FTX International is, of course, operated and managed overseas, right? Like offshore, sorry, not overseas, but offshore. And it goes to, and maybe SEC doesn't have that much jurisdiction unless there is a lot of US citizen customer funds that are on it. Then maybe there's a case. Then, customers can come together to file a class action lawsuit because of the misappropriation of funds, blah, 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 and, that kind of thing. So it's very possible. Now, if let's say they find the white knight, okay, that's very good. You have a chance to at least recover your funds, but it's going to be a very, very long drawn process. I would always say that the smaller amounts are going to be honored first. The larger amounts, and I know that people put millions on FTX because they are so confident, and they were so confident on the exchange and the presence that they had. It is no doubt that having millions is on the exchange, or even high six figures, is not impossible, right? So this is what's been happening. And like I said, if you have tokens, it's gonna be diluted as well. It's gonna be potentially just like to buy time, right, until they can recover and allow you to recover. So that's kind of like the TLDR version of and how I can sum things up for folks who potentially have funds there lah. I mean, I'm actually quite familiar. It's just one or the other, right? If there's some way that you all can get the funds faster, I would be very, very shocked. Like literally very shocked. That means there's just some kind of something so valuable about this exchange that the amount and wanting to buy up the exchange now, I feel that it could potentially be valuable. But I think in terms of the fact that there's going to be a lot of regulatory scrutiny on exchanges going forward, the entity that is going to take over, right, is definitely having to be willing to accept all the difficulties and the challenges that are coming forward, especially the reputational damage that this event has caused, right? Because you are not going to be a very profitable business. You buy up this business, right? It's in a distress period. It's not that it was having crazy growth or whatever. It's now a bear market in crypto. And even if it's going to kind of pull through, I would say that investor confidence is already tainted to the core already. So I feel that it's just gonna be a very challenging time for everybody. So at this point of time, I would say that, you see, the stock market, right, is kind of a little bit more forgiving. So I wanted to also share with folks, right, that if you have been having a challenging time in crypto, I kind of want to kind of stress that maybe you should take a step back, take a breather, right, and try to assess things, and don't try to step back in too quickly. Especially if you've had this experience, we've all been losing money in crypto. I just be very, very honest. Everybody's been losing money in crypto. Like, obviously, if you somehow decided to maintain shorts on the market, you're definitely doing very well. But at some point, you also would think that maybe the market has fallen so much that there's a potential for it to start bouncing back aggressively, and crypto has that ability to do so, right? But now I'm seeing, for the fact that markets are still going to be bearish for crypto because of this incident. At the same time, a lot of folks will decide to be dumping their crypto. They probably want to say they have enough. There's going to be a lot of not only panic selling, but just already at that point of depression already, right? They're so pissed off of the asset that they don't sell at all, or they're just gonna cut their losses and then just get out of the market. You would think that no, that's not gonna happen, right? But don't forget, there are people who started buying Bitcoin at 20,000. Now they are seeing this happen, or they already lost their crypto by putting it on FTX. They already they are just trying to build some form of presence and a small portfolio on FTX, only to have it wiped out not because the market wiped it out, but because of a poor management of the company or the poor management of the exchange. This is just a very painful way of experiencing the market, right? It's like it's not even their fault. And of course, naturally, veterans will always say, not your keys, not your coins. But when you say not your keys, not your coins, people sometimes don't see the need to do so because they never expected that an exchange as large and as well backed like FTX would go down. Like although I don't use them, it doesn't mean that I felt very differently. I really felt that FTX could have been the so-called US version of Binance, like really being strong, trying to save companies. But when I realized they were saving companies with FTT as the collateral, that was the point where I thought, wow, okay, it goes to show that tokens as a collateral is just a bad idea. So when I was looking at decentralized DAOs and kind of having the same thing, right? They would kind of buy the assets. They would kind of have the assets stored in their reserves. Your assets, right, on a DAO. Let's say for example a decentralized DAO. They have it on the whatever asset you put in Ethereum, Bitcoin, whatever asset they are willing to accept. Then from then they're going to kind of swap it with the existing token, and then in the reserves they'll buy it back. They'll kind of want to buy back the token, and then they'll burn off the token to kind of maintain value. That means the token itself, right, isn't valuable. It's the assets that are being placed on those DAOs, right, that makes it valuable. Okay, and so the market or FTT's token was a mixture of both the market confidence in the token and actual assets backing it up. But even though the assets that are placed are so-called reputable assets, right? Because an exchange has multiple, like literally anywhere from hundreds to thousands of cryptocurrencies, and that forms a basket or collective value, right? And when you have, for example, FTT having that social presence in the market, right? That also helps it out because it's being bought up on the exchange because people feel confident. They want to ride on the profitability of FTT, but only to have the whole market, only to have it tank, right? Only to have it tank. So it's very frustrating. It's like and that's how the death spirals always happen, right? Because it's either one, a lack of confidence, and that when CZ saw there was an issue with the company, they quickly decided to make the announcement to dump, which is something that I find must have been a reason for him to do that. Whether is it a malicious intent or whatever, of course he's saying that it isn't, but I'm saying that if it wasn't, then why do you publicly mention that you're going to dump all your FTT? You could have been a little bit more discreet, but then again, I'm not sure how does it look, right? It obviously looks bad when you publicly mention that you're going to dump that much FTT. So that being said, you have the whole death spiral, and that's why I feel at this point in time it's so challenging for a lot of my clients, and I'm sure a lot of viewers are going to share the same sentiment, that how do we build a portfolio? Like, should we even bother to build a portfolio? And I'm going to say that you might want to step away from crypto, look at equities, because equities at the end of the day have some kind of they have a very strong fundamental attachment to whatever that's happening on the global macro scale and also industry micro scale. So why do I say that? When there's a positive in, for example, what you're seeing right now, okay? when the CPI is lower than expected. Because right now we know that we are pushing for a higher interest rate environment. What does this mean? It means that when you push for a higher interest rate environment, things are actually potentially what the Feds are trying to do, at least what they're trying to do, is bring down the prices, right, of things across the board, so that spending also can be a little bit more managed. But it's going to hurt a lot of businesses who are lending, right, who are borrowing from any financial institution. This also goes to show that there's going to be a lot of, when financing is involved, interest rates are going to be higher, your interest payments are going to be higher. This goes to show that your mortgage is going to be higher. This will calm down the property market as well, because you don't want to see people keep buying and flipping homes, right? And you're causing a bubble in those industries as well. I think this is what kind of like is the main reason that a lot of people want to or at least why the Feds want to stop this from happening, and hence the aggressive interest rate going forward. Now, what does this mean for the crypto world? Well, okay, in the crypto world, I am not entirely sure whether when large companies or entities are investing, right, whether they actually have the cash on hand, like literally from investors who are very deep pocketed, and it's not on leverage, right? And as long as the interest payments are manageable, right, there's this so-called credit facility that they can tap on to start investing. And of course, they could actually be investing as a bond, right? For example, maybe they feel that FTX can provide them a bond of 12%. The financial institution that they borrowed from, whatever X bank, is giving them this equity financing or this credit financing for maybe 4%. Right? So you have a net positive in terms of just purely interest of 8%. You see? So there's a 8% positive by doing this, and it's not considered, I mean, it's still high risk, right? Because when you are lending an entity money, right? Entities like in the crypto entity, especially crypto entity, right? They need this kind of credit facilities because they want to buy stable coins, right? Because for a fact that you need to have stable coins, right? So if let's say, for example, let's say for example, I'm an institution, I want to earn 12% from FTX, for example. I will just offer them a line of credit. I say I want 12% per annum on my on my amount of money, right? And you can use and take that money, go and buy your stable coins. From there, you are able to provide and harbor up reserves and have more reserves for your exchange, right? So that's how you have the whole US dollar tether thing. That's how you probably can have BUSD. I'm sure most exchanges function in this similar way. But me as an investor, as you can see, I may not have the cash on hand, but because of my reputation, the collaterals and businesses that I've done with the bank, I'm able to have this line of credit or equity financing. I would say it's equity financing, whether is it secured or unsecured. It's very unlikely that it's unsecured. It's usually secured because banks are usually very, very they play it very safe, right? So they will from then give me this facility. From then I can go out there, I can speculate on the market. However I decide to do it is up to my risk management and the team, right? This is how it kind of works. So that's just a quick rundown on how how businesses kind of lend and potentially need a lower interest rate environment. Now, the fact that the interest rate environment is always going up, right? Anyone who is looking at these kind of financings, right, may have to plan a little bit ahead. Whether do you lock in your interest rate with the banks right now, or you kind of want to play it a little bit more aggressive and have it on a variable. I kind of doubt that anybody wants to have it on a variable at this point in time, because already Jerome Powell already mentioned that he wants to be very aggressive in curbing inflation. So anyone who kind of like is buying a home now wants to lock in for as long as possible, and that's kind of also providing a level of stability, right? Because now the banks that are going to be having you as a customer, you're going to be locking in your interest rate for a good period of time, right? Because you're worried that, wow, if it keeps climbing to 7, 8, 9%, potentially, I'm just saying potentially, right? You'll be stuck at the higher variables, right? The higher interest rate payments, and that's actually quite killer. So these are the things from a very layman perspective, how this is going to hurt, how this could potentially hurt your wallet, because suddenly you are going to be faced with higher interest payments each and every month. Okay, that means you have less money to spend on miscellaneous things. So take note when I say this, right? You want to step back and take a look at how and which businesses are going to do well. Okay, and stocks can provide that. Unfortunately, crypto, right, is so speculative that I cannot say that crypto is going to be in a phase where we are going to be able to ascertain or determine whether or not they are going to do well in this environment. You may say, oh, Ryan, nowadays if you want to beat inflation, right? Yeah, there are so many tokens that are actually doing very, very well. They're going to give you more than 10% staking rewards. But my question to you is, how do you determine the price movement, the price action? Like in crypto, it's not like you have a quarterly earnings season. In crypto, it always needs some level of random news, and this random news can be anywhere from a potential user, like a large company using it, turning from inflationary to deflationary token supply, having some kind of very favorable merger and acquisition. It's not the same. There's no numbers mentioned here. It's always just very speculative. But in stocks, right, you can still at least make some sense to it. Like, oh, okay, there's an announcement by a company that says that they did better from a revenue standpoint, even though they're cutting jobs. They cut jobs maybe last quarter, but now they're starting to turn a profit, obviously, right? Because you cut like literally so many staff. Obviously, you're gonna do very, very well in the next quarter because you cut down so much of your expenses, and you are still generating X amount of revenue. Of course, on the books, right, you're gonna look very good. So as long as there's analysts kind of being able to give you an opinion, and majority of them are saying, okay, this company is going to do well this quarter, and after that when they release their quarterly earnings, there's some it truly outperform whatever those analysts mention, you can potentially see a rise in the stock. I'm just saying that there's some way of telling, like, and timing. We always like to time, right? We like in crypto we always love to time the market, right? So in a way, try to start looking at stocks. I would say that there are so many stocks that are also heavily depressed. Okay, and at this point of time, like, I'm looking at Meta. Okay, I'm looking at potentially Tesla, because Tesla after the stock split is looking, I guess, decently attractive. But I guess the whole EV market is looking also very competitive at this point in time. It's no longer just Tesla, dominating the market. I don't see Teslas all around in Singapore. I also see other brands as well. So that is one thing. And then I'm going to be looking at mostly growth companies. I'm not really interested in, of course, dividend stocks and all that. But yes, it could be a play, but I just find that the dividend play is very challenging, because if the interest rate environments are going up, right, then you might as well just stick to really money market. Really money market, like treasury, like T-bills and treasury bonds, that kind of stuff, like government bonds, because end up any new issuance of a government bond is also related to whatever the interest rate is in that particular country, you see. So there are countries that are following and there are countries that are not following. Then you also have the possibility of forex speculation, right? But that's also another form of trading. So I don't want to get too deep into that. I'm just giving you some suggestions. And I think the ratio would be like a 70-80% into stocks now at the moment. And then after that, 20 to 30% in crypto, or even lesser if your risk appetite is very low at this point. And even if you had a higher risk appetite, right? As long as you have a stable job, you have your financing in check, right? For some, like your finances are well planned. You always have a positive inflow of cash and everything. Yeah, you can potentially start building this and doing this. But like I said, guys, I only see further downside in the market, especially for crypto. I just see further downside. It just hasn't cleaned itself out yet. Now with this current situation of FTX, right, I know for a fact that there are a lot of companies linked to FTX that may default also, because they were very confident And there are certain companies that are a little bit better well positioned. Like Sequoia Capital actually lost, I think, 210 million, right? They have already zeroized, and they're saying that this 210 million is part of their separate entity, a growth fund that is like literally maybe 3 or 4% of the overall assets that they manage. So Sequoia Capital is of course very huge, but yeah, they put a large majority on FTX. So right now, you have this scenario. There's going to be a contagion. The market is obviously taking a breather. It's a Friday. There's going to be a sell-off. And potentially whatever you see now is just a technical rebound. It's not actually a fundamental, there's no fundamental improvement. There just isn't any. I just don't see it. I see Bitcoin going as low as maybe like literally, right, 15,000 only to see maybe 11 to 12,000, because that's a technical support already. 11 to 12,000 would be very decent, and I know that for a fact that at that point there's going to be a lot of market players starting to find it very attractive already, at least for Bitcoin. Now Ethereum obviously is going to follow suit, right? And of course all the altcoins are going to have like another further 50% off, and it's going to be very attractive. So at that point, even there's no fundamentals, right? Everything just looks technically so beautiful that you will see people start coming back in again. Now, the only issue is that they are not going to trust the exchanges, right? Of course, if you're on KuCoin, you're on OKEX, you're buying on, I don't know, like, to be frank, right now, it's just so hard to mention which exchanges. I think Huobi is still up and running, doing well. Poloniex, Bittrex International. I know for a fact that these exchanges are still functioning, right? But the liquidity is not fantastic. So I guess it's okay, because since the market is in a bear mode, there's not going to be any heavy buying. You might experience server outages but you know what? The market is just so shit. I don't believe that any one particular exchange is going to have a server outage, right? Or suddenly an influx of users. It's quite unlikely. It's really, really quite unlikely. So you're going to have this ability to dollar cost average if you want to, and start buying cryptocurrency if you want to. But I think everyone will learn from this lesson that not your keys, not your coins, right? You're going to start owning a cold wallet. You're going to definitely want to own a cold wallet. Like, you will learn from this. Like, if you don't learn from this, right, and you still don't buy any and you don't own a cold wallet, I have nothing to say. I feel that you just shouldn't be in the space, because you need to have a cold wallet, guys. Like, that's the last kind of line of defense for your coins, because once you lose your coins, right, you will have, I don't know why you even still have the morale to still be in this space, because you are out of the game already. Like, I mean, you can always have more money, you can still continue to buy, but I don't know, it's just weird. Yeah, so okay, wait, let me see. Let's just catch up with the chat a little bit. Okay, so I'm gonna just do some questions. Right, anyone who trusts FTX after this will never learn. Yeah, I mean, it's part of it. Anyway, welcome guys. Okay, and suddenly I have this Sex 69 bot fund. Oh well, whatever. Okay. Man, this is just depressing. Like, you have people watching, but then you have this thing is, come on guys, it's literally those okay, it's one of those things, right? It's one of those things where it's annoying, right? Because these days I don't run many streams, and it's frustrating. You have folks who genuinely want to learn, and then you have stuff like this happening. Oh man, wait, let me see. All right guys, so if you have questions, right, like if you have a particular DAO that you're in, why are you still investing in, why are you putting your money there? I like to hear from you guys. The community is always very powerful. I've always believed that in crypto, the most powerful thing in crypto is really the community. Like, literally, you can have a conversation, you learn a lot. I also read up on Olympus DAO, and I mean, like I said, it's not that I don't like it or whatever, but it's the same thing, right? Any DAO, right? If they kind of function in a certain way, they are also buying back. You are putting your cryptos there, and then they're also using that crypto to kind of boost up or bump up the value of their own internal token. it's okay, you know. It's just very experimental. This whole space is just very experimental. And also, you know, breach vulnerability, this kind of stuff. Okay, so let me just get rid of all this shit first, and then we can get to the questions. Okay, trend is down. Yeah, trend is definitely down. I don't deny that. I don't deny oil is a good play for a while. Okay, Josh. Wow, that's shocking. Okay. So core value at 100 plus million is actually it's not 100 plus million. It's I think 213 million if I remember correctly. Okay. Anyway, I just saw it very briefly on their website, and yeah, there was also a bit of chatter back and forth that wow, they're so excited about when they saw and they were in a call with SBF at the time, and then he was playing League of Legends apparently. So he was playing League of Legends, and then you know, it was like they found him like some kind of like god, you know, like wow, speaking about regulations and stuff like that. Well, end up he's a degen himself, you know. So take everything with a pinch of salt, guys, and let's never bother whether he's a crypto billionaire. Like I think for now, right, crypto billionaires to me are like, I don't give a shit lah. I don't give a shit because literally the ethics and everything like that, and how you became a billionaire can just go to dust overnight. Okay, so let's not care about all this kind of shit anymore. Let's just take it like, okay, cool. It's a cool T-shirt. It's a cool car. It's a cool Lambo, whatever it is, and move along. Like there's nothing to like. I don't know. Like after all this that's happening, right? When you say you're a crypto billionaire, I'm also very doubtful. Like sometimes just people are just buying themselves time to post on social and, you know, that kind of thing. I mean, SBF to me, you know, he's not a flashy guy. When you look at the way he dresses and everything, it's just t-shirt, shorts. He's just very nerdy. I mean, to a certain extent, he when you listen to his conversations, the way he talks, you know, he's very fast. And he sounds relatively intellectual, but at the end of the day, I think human beings are human beings, and we all make mistakes, right? And this clearly was, he probably got his foot caught on one of his trades, right? And he probably needed to cover the shortfall, and obviously that's when he started dipping into customer deposits, right, to cover whatever that was lost on Alameda Research. I guarantee it's something like that, man. Because all you need is just one freaking wrong move, right? Because let's just put it this way, lah. Anything that is a research or algorithm trading strategy, right, has to be very consistent. And you're making peanuts. It's always about making peanuts, and you know, there are certain times that your peanut can grow into a small peanut tree, but it's never too diverse. It's never so diverse, especially in crypto, right? Because the market is so dynamic, right, that you want to continuously switch and try to squeeze out more profitability. Because the moment he probably took a big L on one of the positions and dipped into customer deposits, right, that was the part where probably he started to panic already. That's why he probably started to become more aggressive. I'm all speculating, but kind of like think from a trader perspective. You lose huge, right? You dipped into customer deposits that you shouldn't have done from your terms and conditions. Okay, so I definitely feel lawsuits are going to be coming in. And for a fact that once you did that, okay, you definitely want to try and change and become more aggressive in your trading. Okay, so you started to become more aggressive in your trading, and that's when things started to turn south. That's when Binance realized, hey, there's a big hole in your coffers, like on your balance sheet. Hey, where's this big hole? How come you say that you have the reserves but you don't have the reserves, right? So that's when CZ was doing that, his digging. Yeah. So yeah, guys. Picking up pennies in front of the freight trains. Yes, that is true, because crypto is now getting it's just so attractive, isn't it? Like it's starting to get cheaper and cheaper. Well, I mean, Ethereum, you see Ethereum, right? Why I feel Ethereum is holding up relatively well, because I think a lot of the nodes are already staking for long term. Okay, that's one. And I think a lot of folks, are also. I mean, okay, you see, like DOT, right? DOT has a 28-day unbonding period. You know, So I'm thinking, 28 days unbonding period is not easy, what? Even if they wanted to panic sell, they couldn't, because you do the unbonding, right? You kind of like are now in a situation where, okay, even if you're in the process of unbonding, you suddenly stop losing all your staking rewards, right? Because you lose the moment you are doing the unbonding. You get your tokens 28 days later. The market already moved against. I mean, the market is already down further than where you wanted to. So it's kind of a good thing, because that's how mutual funds function, right? Because it's so slow. Firstly, it's slow because you're investing in a basket of unit trusts, or sorry, in a basket of stocks. At least not you, but as in from the fund manager standpoint, they are kind of using your funds that you do monthly or lump sum or whatever, and they are investing into this basket. Then from then, when you want to liquidate, it takes anywhere from, I think, 7 days, T plus 7 days to kind of liquidate. But even if you liquidate, right, it's not going to affect the price of the NAV of the particular unit trust. It doesn't do anything. So I just want to let you know that things moving slower is always better. That's just what I'm trying to say. FTT was in a lot of pension plans. Oh my goodness, really? I wouldn't be surprised. I really wouldn't be surprised. Okay, the notion of crypto billionaires should be treated with skepticism. Yes, totally. Like that's why I never really admire why I never really admire crypto billionaires too much, because sometimes they may have run a scam that you do not know, right? They are running a scam internally that you do not know, right? It can be many ways, right? At the time it was pooling, right? Making money through pooling. That means attract your users through your following. Do pooling, already take a commission from the pooling. At the same time also, you are not using your own funds, right? You're actually putting in the funds from your users in, get the tokens, everybody makes money. Okay, we move on to the next project. Okay, then after that, you have literally crypto scams or high yield investment program scams that are collecting Bitcoin, Ethereum, anything valuable, usually Bitcoin or Ethereum. Say that it's gonna give you a yield of anywhere from 3 to 5% per day or per month, and then after that, close down the platform. Okay, that's another way. Then, of course, there are the actual traders who actually traded the market, but I would call them more of investors, or like you can either be trading through margin, or you're someone who is who has invested, like myself, who park into various cryptocurrencies. That's what we all did in 2016, 2017. We parked into various cryptocurrencies. Market did very well. We cashed out. We move on. We did our things. Then after that, of course, last but not least, you could have been someone who invested in private equity. That means you bought into certain crypto-based plays, and then they did very well. But I think at this point of time, I don't really notice any crypto related plays that have done so well that they actually exited the market via an IPO. It should be always a private acquisition, or a complete a complete private buyout. I have not heard. Maybe you could share if you're a beneficiary of something like that. You invested in private equity from some crypto company, and that crypto company actually did pretty well. You can let me know. I would like to know the name of the company if you could, and how you exited. That would be very nice. And then in terms of, I think, and of course NFTs. Sorry, I forgot to mention, and also NFTs, right? There was a good bunch of folks who rode the NFT wave and the DeFi wave, right? That's just basically a wave. They were flipping NFTs, minting and flipping NFTs on OpenSea, or whatever NFT marketplace at the time, and it was very short-lived, right? I would say that one is a good maybe 6 months or so, right? Just to ride that wave, and then I heard of people making millions, but I doubt that they are worth millions now, because I think the floor prices of most crap NFT projects are very, very bad. And even if there is a so-called floor price, it's just that you cannot really sell, right? You cannot really sell because there's no demand. You're holding onto a JPEG, That's all you're doing. Like, there's literally no ecosystem being built or no efforts being made by those founders. I know a lot of projects that are falling into that category, but of course I know a minority of projects actually still having a good intention to build out that community, have IRL events, having like proper content creation and developing that whole creative space. So there are these pockets of developments that are happening in the space, but I wouldn't take anything too literally at the moment. I wouldn't get excited about anything. I mean, how do you get excited after consistent blowouts? We have just titans falling left, right, and center now. And when titans are falling, right, they are controlling the majority of this space's money, right? And if you don't say that this is a outright failure, right, I don't know what to say. It is an outright failure, guys. In fact, it's an embarrassment. That's why no one takes crypto seriously. Like, when I tell them that I'm in crypto, they're like, whoa, wow, you're in crypto. They're not like, they're probably like, they don't even know. They're probably in shock. Like, a 40-year-old guy, a ex-banker like me in crypto, like, I don't even feel like, I feel a little bit shy that I'm in crypto, in a way. But when things were good, of course, it's like, whoa, you're in crypto, doing well. But then it's like a seesaw. But anyway, yeah, you're in it, right? There's nothing you can do. You just have to grit your teeth and push on, right? If an exchange is lending 15% on 15% to its users, imagine at what rate the banks lend to them. Yeah, probably. Yeah, I don't think. No, I don't think banks have that high of interest rate, right? Like I don't think so. It's not a bank. It's usually private investors that are willing to lend to exchanges. I wouldn't say that no bank would lend to FTX. It is possible to still build a relationship because after all, exchanges who have a bank account, right, obviously will have some kind of banking facilities because they still need to and of course at the time FTX you can wire money in and you can wire money out, but I think they use Silvergate. If I remember correctly, they're using Silvergate. I don't think it was like Morgan and Stanley, Bank of America, that kind of thing. It's not like, I don't think so, I don't know about the FTX.US. Maybe you can share with me, those folks who are using FTX.US. They say and of course SBF says that everything is fine, right? Everything is fine on that front. I do not know. Whenever a crypto exchange founder says everything is fine, right, I think you better run for the freaking hills already. Like, even if it's CZ, right, I think everything we just have to be very cautious. Protect ourselves, guys. Protect ourselves. Anyway, okay, I've been rambling long enough. I would like to say thank you so much for watching, guys. If you like this stream and you feel that it's kind of helpful, right, give it a thumbs up, and of course, please subscribe to the channel. Help me to grow my tiny little crypto channel again. And and of course, please come on stream. Let's chat. I do live streams most of the time. I'm poor at video editing. I would just like to share my insights as much as possible. If I come across any news, I also share my opinions. And I enjoy just talking about the market. I enjoy talking about crypto. Stay safe, right? Remember to have your cold wallet, and I'll see you in the next live stream, guys. Peace out.